Hello, my name is Elliott and I'm the editor of the Energy Strategist. Today I want to talk about a little different sector that I've been discussing in the last couple of webcasts, and that's really the coal market. I think a lot of people make the unfortunate assumption that coal is not really an important source of energy anymore, that it's just too dirty, too polluting. And earlier this summer, certainly, we heard a lot about new greenhouse gas emissions legislation going on in places like Europe and eventually probably the United States as well. And how that would essentially kill the coal market. The reality, of course, is very different. The reality is that coal is far and away the world's most important source of electrical power. If you look at the United States, it makes up about 52% of the U.S. power generation. It makes up more than 75% of power generation in both China and India. In fact, coal demand in China is growing so fast because they're opening as much as one new coal-fired power plant every week just to keep pace with their growing demand for coal. In the United States, far from being a dead fuel, the U.S. Department of Energy actually believes that coal demand will actually grow and it'll make up about 60% of the U.S. electrical grid by 2030. So it's really still a very, very important source of energy worldwide. With that in mind, we look at the coal market. We saw a very aggressive run-up in most coal stocks back in early 2005, all the way up until about May of 2006, a very nice run in these stocks. Subsequent to that, we actually saw most of those stocks really collapse. If you look at a company like an Arch Coal or a Peabody Coal, you'll see that they came down very aggressively after that. A very simple reason for that. The winter of 2005-2006 was very, very warm. So U.S. coal prices came down as a result of lower burning of coal and very inflated inventories of coal at U.S. utilities. That situation has recently started to reverse. What we've seen over the last year is that in the eastern United States, production of coal is way down as a result of a bunch of new regulations that the government's imposed on coal miners there. Some environmental regulations related to how they can remove dirt from mines in the east, as well as a number of new safety regulations which make it more expensive to mine underground seams of coal in the eastern part of the United States. Production from the west continues to ramp up, but it's not really even making up fully for the declines in production in the east. So lower coal supply. At the same time, demand has actually ticked up quite a lot. Electricity demand in 2007 was well above what it was in 2006. So those inventories have started to come back down to more normal levels. But more importantly, what we've seen in the last 6 or 8 months is a total change in the coal market that we really haven't seen in well over a decade. And that's the international coal markets. Specifically, China recently this year switched from being a net exporter of coal to a net importer of coal. And that means that they're having to source coal mainly from Australia and Indonesia in the Asia-Pacific region, just to keep up with their demand growth. This coming year, 2008, we're going to see those imports of coal, those import demands for coal really ramp up very aggressively in China. India is also a major importer of coal and is very reliant on coal for its power. So with all this new demand for coal from China and India and other parts of Asia and the emerging markets, we're seeing a lot of other countries having trouble competing with these countries for coal supply. So for example, Europe, whereas they used to be able to source coal from places like Australia, are having trouble gaining access to that coal. What this means for the U.S. market is that for the first time in over 10 years, coal producers are actually signing long-term supply deals with major U.S. mining companies to try to garner supplies of coal from the United States to be exported to places like the European Union. So the result of that has been another major source of demand over the last few months. Coal prices are starting to turn up. Stocks have been rising rather aggressively over the last few months, but I still think that there's another run for these stocks like Peabody Coal, symbol BTU, going into the new year. Thank you very much. I look forward to the next webcast.